and welcome to Market Domination. I'm Julie Hyman. That's Josh Lipton, live from our New York City headquarters. We're giving you the ultimate investing playbook.
That's true. Tune out the noise and make the right moves for your money.
We've got 1 hour to go until the market close. So let's take a look at the major averages here. We're starting at the interactive today, so we're doing things a little bit differently. As we see the Dow fall today, so we've got another decline, another sell-off going on in the markets here today. Remember, we ended Friday on an up note into the weekend, but that feeling did not last. The Dow now down 567 points, more than 1%. The S&P 500 down 1.5%, and the Nasdaq is now losing more than 2% here, Josh.
Big themes playing out in today's trade. So one, you have trade uncertainty because President Trump has told you he's going to impose these tariffs on what are key U.S. trading partners. So investors have to try to think through what that means for the economy, what that means for earnings growth. And then we do have these growth concerns, which we've been talking about, which are bubbling up. And we had more economic data, Julie, today, which you could argue sort of maybe feeds into some of those jitters because you did get soft data on our manufacturing sector. I mean, in general, it's a big week for economic data. We got the big jobs report on Friday as well.
Yeah, and if you recall on Friday, I was talking about the Atlanta Fed GDP Now reading, which takes those daily economic reports that we get and feed them into a model that looks at what the quarter's GDP could be. Now, on Friday, as we told you, it showed a decline of 1.5% in the first quarter. And we said, well, we'll hold up. We're going to get more economic data. That number will probably go up. Well, today, because of the data you mentioned, it's now down 2.8%. Not necessarily anything to be alarmed about because we'll get more data, but still reflecting some of those concerns. And then as we're looking here, we definitely see tech selling off more, but I want to take a look at a couple other things here. First of all, we've got the VIX finally peaking above 20, reflecting these jitters in the market. And then we've got what's going on in the tech sector today. We got NVIDIA down another 8% today. There is a report out of Singapore that country is looking into servers that were shipped to Malaysia, Dell and SMCI servers, that may have had NVIDIA chips that were looking to sort of circumvent the export controls on chips shipped through China.
NVIDIA can't get out of its own way. I mean, truly, they had that report, which frankly the street thought was fine, but investors thought was underwhelming. Now you have these headlines today. You know, NVIDIA, of course, just the face of that AI trade. Can that AI trade actually work without NVIDIA participating?
Yeah, and there's, of course, concerns about tariffs here as well. If there are going to be more tariffs, if there are going to be more export controls,
that has been an overhang.
What effect is that going to have? You see the so-called Magnificent Seven all in the red today, as well as Broadcom down 6%.
Which
Eight
is soon to
reports this week.
Yep. Donald Trump's latest tariff deadline arrives tonight. Let's get to that, with potential new duties starting tomorrow morning on America's top 3 trading partners. For more, let's welcome in Yahoo Finance's Ben Werschel. Ben, what is the latest?
Hey guys, I have the latest for you. Is just Trump is speaking right now, and just a couple of moments ago, he sort of reiterated his tariff plans there. He said, quote, "There's no room left for Canada and Mexico," and his plan is to impose 25% duties on those 2 countries, Canada and Mexico, America's 2 biggest trading partners, and then additional 10% duties on China. The timing here is it's supposed to go into effect at midnight tonight, midnight Eastern time tonight. This is a follow-up of last month where he announced these plans built on illegal immigration and illegal drugs, and so it's all set to go into effect. This is the sort of latest from Trump. I would note that at the last minute last time he did sort of pull back and pair these, but for right now he says these are 25% duties on these countries and there's no room left to go. He's expected to make a formal kind of decision announcement tomorrow, but he says it's going into effect tonight.
Well, and Ben, you know, the market hopes certainly seem to have been pinned on whether there might be some sort of delay. So that could be contributing to some of the selling here today. And then you have the president also posting on social media about additional agricultural tariffs, but it was sort of a vague post. What do we know about that?
So I read that as sort of tied to this larger issue, because this was, as you mentioned, this was about agricultural tariffs, and he'd said that there's going to be new tariffs on April 2nd. This is another sort of part in his timeline of reciprocal tariffs on agricultural products coming in, and it was kind of a message to U.S. farmers to sort of get ready to sell more in the United States. That comes as what China is saying they're going to do if Trump follows through tonight is impose a bunch of tariffs on agricultural products, U.S. agricultural products going to them. So it sort of shows it's almost like a preemptive plan on these China tariffs that was been a feature of the U.S.-China back and forth for years, going back to Trump's first term, that agriculture is really in the center, and Trump very trying to get out in front and saying, I'm here to defend farmers, I'm here to help farmers one way or another. Exactly what that means for food prices, I think, is the big question here, if there's a whole lot of tit-for-tat tariffs on agricultural products going in both directions.
Ben, can I ask you, just as someone who's followed this story so closely, why is Trump threatening these tariffs on Canada? With Mexico, I think everybody understands the key issues here. It's border, right? What is he trying to accomplish with Canada?
Well, what he says, I mean, his line, and he sticks to it, and people around him say that he seriously wants to do this. It's his sort of annex Canada idea. He'd make it the 51st state. He says it at every event. He talks about it all the time. But I think the kind of overall thing here is he just wants to kind of control Canada and sort of show stronger, because the data here is not here in terms of Canada being a big player in fentanyl. The studies of this are very clear. It's made in China. It's sent to Mexico. A little bit goes to Canada, but very little goes into the United States. And sort of border crossings are down. So it's sort of the stated reason is this illegal migration fentanyl, but the kind of larger issue here is kind of clearly a kind of domination issue with Canada and a sort of dislike he has of Justin Trudeau.
Ben, thanks so much, as always, for keeping us posted on all of this.
Sure thing.
We've been talking about how this has been affecting the market. Stocks are lower ahead of the closing bell as those looming Trump tariffs create some market uncertainty. For more on what's going on here, let's welcome in Brian Levitt, Invesco Global Market Strategist. Brian, good to see you. Thanks for coming in.
Pleasure.
So the president's speaking now, not backing down from the Mexico and Canada tariffs that are scheduled to go into effect at midnight. Is it fair to say that most market participants were thinking this was a negotiating tactic, it wasn't going to actually go into effect, and now that it looks like it is, people are starting to freak out?
I think it is fair to say that. I mean, we saw a month ago a lot of setup of concern around it, and then when the administration backed off for a month, the markets were calm. I've heard it from a lot of people, similar to what you just said. This is a negotiating ploy. He'll extract some concessions out of the Mexicans and the Canadians, and then we'll be on to all the good stuff, tax cuts and deregulation of industry. So the market's trying to grapple with repricing for now the tariffs and wondering when the policy follow-through will be on the things that many people were excited about when Trump was initially elected.
And Brian, I think for investors who are listening right now, they're trying to figure out what is the possible impact of tariffs on earnings growth looking ahead. How, as a strategist, you try and think through that dynamic?
Yeah, things slow as a result of it. Yeah. And it either someone's got to pay for it. So either the businesses pay for it and
or we do.
And if the businesses pay for it, then certainly the cost line is going to be impacted as a result of it. So what I always tell people is that tariffs will lead to less optimal outcomes, right? Plain and simple. You can decide that it's good for security, you could decide that it's good for specific industry or community, but in the aggregate, you're going to get a less optimal outcome, and you're seeing that with regards to how the markets have been handling it in the short term, and certainly with regards to sentiment. Sentiment's been pointing in many places in the wrong direction.
Well, and if you look at some of the recent polling, it has been that people elected President Trump in part because they wanted him to focus on the economy and tackle inflation.
Right.
And I know you've been watching inflation break-evens, and tariffs don't help with this either, right?
They don't. If you've been watching the break-evens the way I have, in the short term, so 1 year, 3 year break-evens, those had moved up, meaning we're going to have some near-term inflation for obvious reasons. The good news for investors and the good news for the Federal Reserve is that the 10-year, while it's moved towards the higher end of where it typically is, it's still below 2.5%. So I view as long as you're below 2.5%, that's a Federal Reserve that's not going to be concerned that inflation expectations are becoming unmoored.
And the implication there being that any tariff effect, even if it's not a negotiating tactic or whatever, but an effect would be temporary.
That's what we saw in 2018.
Yeah.
You saw the price of tariff-impacted goods and tariff-impacted categories go up. If you wanted a washing machine in 2018 or 19, the price of that had gone up. The rest of the core basket, services, did not go up. because we either make substitutions or we spend less on services. So I don't think it's broad-based inflation. If you remember, in 2019, the Federal Reserve actually lowered interest rates. So I think that's a better way to think of it, that this is going to impact sentiment. To your point, it's going to impact corporate profitability to an extent. I don't believe it's end-of-cycle stuff. I believe it's a less optimal outcome, and ultimately the Federal Reserve is going to have to follow through with lower interest rates.
We talked about trade uncertainty, but another big worry that we've been talking about is these kind of growth worries bubbling up. Yeah. And you got more economic data today, you got soft data on the manufacturing sector. I'm curious, are you sharing those worries, or do you believe they're overblown? How do you think it through it?
Well, if you think about the balance of risk, we've debated for the last number of years as an investment community whether you should be more concerned about growth or more concerned about inflation. Once inflation peaked by the middle of 2023, I was on to growth. And I've been far more focused on growth, even with inflation at the upper end of the Fed's comfort zone. I'm okay in the upper end of the comfort zone. I'm more concerned about what this means for growth. For a long while is what do all these interest rate increases mean for growth? Most of us had fixed rate mortgages, so it didn't really matter. But now it's more, what does this type of policy uncertainty mean? And it's policy uncertainty in a variety of different areas. How's the federal workforce feeling about what DOGE is doing? How's the business community feeling about what these tariffs may do? So maybe the president can start to provide some more clarity in his upcoming comments, but that's really what the market, tell us the rules, right? That's what the market wants to know.
And so put all this together for us. Are you getting more defensive right now as a result of all of this?
If I look at leading indicators in the United States, they're kind of going sideways or slightly lower. So that still suggests you want to be a little bit more defensive, low vol, quality. The problem with quality is people tend to think Mag 7. You want to be a little bit more value oriented with regards to quality. Interestingly enough, you have a different story outside the United States, where you're getting surprises to the upside. Leading indicators are improving in places like China and Europe. Their central banks are helping. So that's become a better story so far this year. So it's a little mixed. Recovery trade outside the United States, hoping for some pickup within the United States, but sentiment currently pointing in the wrong direction.
All right, thanks a lot, Brian.
My pleasure,
Good
thank you.
to see you in person. Well, a new report projecting a potential price increase of $12,000 to vehicles. That's if President Trump's proposed tariffs do go into effect tomorrow. For more, we're bringing in Yahoo Finance senior autos reporter Prasad Subramanian. This is something we've all been seeing different estimates for, wondering about, because we do know that we get a lot of vehicles and a lot of parts from Canada and Mexico. So what is this report? How does it break down?
So basically they took, Anderson Economic Group took a look at certain vehicles that are North American assembled, meaning they're built in Canada, Mexico, the US, but they also use a number of parts from various regions. And the number you said is $12,000 for a particular battery electric crossover. That's how much the price would go up if these tariffs are implemented, I guess, tomorrow. It also found that a gas-powered pickup would go up by $8,000, and then they found a small car around $3,600. So there's various different actual cars that they anonymized, and they actually did the analysis. The crazy part is it doesn't even include the cost of steel and aluminum tariffs. That's not even part of this analysis. This is just based on what Trump is saying and how automakers could try to work around what they'd have to pay more money for in terms of components. So it's not exactly a good thing for them. I mean, not good for consumers either, because those are going to mostly pass down those costs to the consumers, MSRP. So pretty inflationary there. You know, for the automakers part, they're lobbying to say, hey, if you're going to do this to us, why not do this to the South Korean automakers and the Japanese automakers who are not being tariffed as heavily, and they don't make any of their cars in the U.S., right? So that's sort of the give and take there, the balance. It's sort of part of the negotiation between the automakers, the Commerce Department, and Trump at this point.
And you cover the automakers so closely. When you talk about whether they'll pass them on or not, I mean, it's not like their margins are doing great right now, right? So they don't have a lot of wiggle room in terms of absorbing some of these costs themselves, right?
There's no wiggle room. 5-7% maybe margins here. Like, what are you going to do? You're going to give them away for free? So they're going to have to pass on almost all of it, most likely, unless they can determine a solution, making those cars in the United States or other areas we have free trade that's not being tariffed. But then that has costs too. So ultimately, this is going to be an inflationary type of thing for these automakers, and they have to sort of determine how are they going to do this without losing market share to the Korean automakers or the Japanese automakers. Can
I get your take on one of the headlines I saw today? It was in your world that I thought was really interesting. That report, Pras, that Honda might bring its next gen, I guess, Civic hybrid to the U.S. rather than Mexico, right? To avoid these potential tariffs, which you could argue does kind of dovetail with what is a primary agenda item of Trump.
Exactly, and they're not the only automaker doing that. And that's sort of like, are Americans going to be okay with, I want to support American manufacturing, but I'll pay 10%, 15% more for this Civic hybrid? That's the big question. Is it going to be a popular policy when you're willing to pay more from the pocketbook to help out people in Ohio or Indiana? I think where that Indiana, where that Civic plant would be. That's the big equation that Trump is betting on, I guess.
We'll see what happens. Thanks, Pras. Appreciate it. We're just getting started here on Market Domination. Coming up, Taiwan Semiconductor has announced plans to invest $100 billion in chip manufacturing plants in the United States over the next 4 years. We'll get to the details and what it means for the chip sector on the other side. Plus, later in the hour, we're joined by a union leader who is taking aim at Elon Musk and Tesla's share price. That and much more when Market Domination comes back. Taiwan Semiconductor intends to invest $100 billion in chip manufacturing plants in the U.S. President Trump making the announcement today saying, quote, "This is a tremendous move." Here with more on what's ahead for U.S. chip making, we've got Bernstein Managing Director and Senior Analyst Stacy Rasgon. Stacy, it's good to see you here. Obviously, this is the latest in, first you had the CHIPS Act by the Biden administration. Now you have this latest effort on the part of the Trump administration to build this sort of homegrown chip-making, manufacturing industry in the U.S. Is it going to work? Is this, kind of break it down for us?
Well, I mean, so the goal here, at least on this announcement, seems to be leading edge. And like with leading edge, you only have a few options. It's TSMC, Intel, and Samsung. And it's really TSMC. TSMC was already spending a bunch of money here with $65 billion. It looks like from what I'm seeing that the $100 billion that they're going to invest maybe on top of that. Intel was building here, but they're actually delaying their stuff. They actually just on Friday, they delayed their Ohio efforts to 2030 or even beyond. So, I mean, if somebody is going to build leading edge, a larger amount of leading edge capacity here in the U.S., it probably has to be TSMC. It was already them. It looks like it's going to be more. I would say $100 billion is kind of a lot. I mean, the whole CHIPS Act was $52 billion. I think direct grants was $39 billion, and that was over 5 years for the entire U.S. semiconductor industry. So $100 billion or 165 or whatever it is that TSMC is going to be spending for one company in the U.S. over 4 years is a lot. I think there's questions on whether or not we'll actually need that much, frankly. We'll see what they do over the next several years. But clearly there has been a massive effort on the part of the U.S. government, as well as other governments, to try to get as much capacity for strategic reasons built within the borders as they can. And looks like at this point it's happening.
Stacy, do you think we ever get to a point in this country where we're truly, totally and completely independent when it comes to chip manufacturing, independent of Taiwan, independent of South Korea?
It's difficult. I mean, as big as these numbers are, I mean, in Taiwan, there's even more capacity installed. And you have to remember, it's not enough to just have like the factories for the wafers. There's the wafer manufacturing, and then there's the packaging, and there's like the raw materials and like everything else that goes into it. I think it's difficult to be completely self-sufficient for everything that we or any country needs to make semiconductors. However, can we get more of that strategic capacity built here? Yeah, yes, we can, and we have been, and it looks like we'll be getting more of it. But we'll never be completely self-sufficient. I think that's a pipe dream.
Well, and Stacey, so we have this effort on the one hand, and then we have tariffs and export controls on the other hand, of course, right? And we have this report today that Singapore is looking into servers that arrived in Malaysia that were made by Dell and SMCI that may have had NVIDIA chips that were subject to those export controls. NVIDIA shares are down a lot today, whether it's specifically on that or more generally. How big of an issue is all of this? Yeah,
well, I mean, stuff going from Malaysia to Singapore is okay. I think the worry is that it's finding it's like through the back door into China, right? That's the concern. There are new rules that the Biden administration actually put into place to try to stop that. They're called the AI diffusion rules. They go into place in May, and they will help to block shipments like through the back door into China. But no export controls or anything like that are ever going to be completely airtight. There's always going to be, backdoors and gray markets and smuggling. It's imperative on NVIDIA as well as all the other companies in the supply chain to do everything they can to know their customers and to try to control where their stuff is going. And they do. They do this to the best of their ability, but nothing's airtight. I do think it's more of a headline risk than anything else. I'm actually not convinced that there's tons of stuff leaking from Singapore into China. Even NVIDIA says, I think they report a lot of revenue into Singapore, but it's a bill to, not a ship to. I think they've said less than 2% of their overall revenue is actually going and actually getting directly into Singapore. So I don't think it's that much of a problem, but certainly it makes large headlines. And certainly it is going to get the administration concerned. And this administration may take actions, whether or not those actions fundamentally are warranted or not.
Stacy, for investors right now, who might be long NVIDIA, what are the catalysts on the calendar that they should be looking to that could get this stock working again?
Yeah, it's funny. It's not just NVIDIA. The whole AI trade looks like it's taking a bit of a pause right now. I think those are just concerns on, you have to remember the numbers have gotten so big so quickly. People worry about sustainability. They worry about CapEx growth slowing. I don't think it's rolling over, but certainly you can't grow 1,000,000% forever. Like at some point it slows. And so these are some of the concerns that people have had. And couple this with all of the tariffs and the general, everything else. There's just a lot of volatility and everything that frankly this administration is creating. It's causing issues with lots of the higher flying growth names. And it's harder to grow when things are that volatile, and they're all kind of selling off. In terms of catalysts, we just had their earnings last week. There was a lot of nerves going into the earnings. I thought the results were actually fine. I know the stock is sold off afterwards, but the results themselves I thought were just fine. It was actually very quiet. We have NVIDIA's GTC event that comes up in March, and we'll get more color on what's going on and the future roadmap and everything else. And then we'll kind of see how things go, I guess, as we go through the year. We'll look for hyperscale CapEx guides and that sort of thing. At this point, I would say it looks like in terms of spending intentions, from the customers, it's still going up, not down. NVIDIA looks like they've sort of released the floodgates in terms of the supply issues they had on Blackwell. They are still supply constrained. They are likely still to remain supply constrained. I actually think the fundamentals look fine, but clearly people's nerves have gotten a little more on edge, and NVIDIA, as well as a lot of the other growthy stocks, have started to sell off.
Well, let's talk about another one of the growthy stocks briefly, Broadcom, because it's reporting earnings later this week after close on Thursday. The shares, along with NVIDIA's, are down today. In the case of Broadcom, about 7%, right? And Broadcom, late last year, it sort of came to the market's attention, they're going to be able to make all these in-house AI chips for these companies. Is that thesis still intact here? What are you expecting from the numbers?
Yeah, no, I think so. And you have to remember, it's not like they were already making them, right? Their biggest customer is Google. They've been working with Google for 10 years on this sort of stuff. So I don't think that was new, but certainly they were able. It wasn't a narrative that was as widely spread as, say, the GPU narrative for NVIDIA. And so it started to catch people's attention. And they got excited about that. I think there still are some nerves broadly on the overall AI trade as it relates to them. I think there's some nerves about, again, some of these new China regulations, because one of the 3 customers for these ASICs that they have, one of them is widely believed to be ByteDance. And so there's some concern over, especially given some of the new regulations. Remember, it's no revenue right now, but can it come to fruition over time if those Chinese regulations are in place? So there's some concern there. I get all that worry. In the near term, though, most of the AI ramp for them this year is going to be Google. That I think is fine. Their non-AI business looks like it's really hit a bottom. Again, that was they didn't do well last year. Nobody in those markets did. They were down a lot, but they've hit bottom. I think some of the trends in those businesses actually starting to look a little better. We got a little bit more of a green shoots. And then they have the software business. They just bought VMware, and they're killing it on that. It looks good. The stock has been expensive. That's sort of been the one concern that I've had. It's been more expensive than it has been in the past. Valuation, I think, has come down. I don't expect earnings to come down. It's starting to look increased. Most of these names are starting to look pretty attractive to me.
Deep breath for the people there watching all of the headline risk.
This happens sometimes. This happened in August. It happens, right?
It happens. All right. Yeah. Stacy, it's great to see you. We always appreciate your time.
You bet.
Thanks. Now time for some of today's trending tickers. Let's start with AbbVie here. That stock is higher today, but it did pair some of its advance. The pharma company announcing a license agreement with a company called Gubra for an obesity drug. Gubra is a Danish research company. Will receive $350 million in upfront payments, up to $1.88 billion in development. Basically what this is a perhaps GLP-1 alternative that AbbVie is now betting on here. There are questions, though, about how competitive it'll be in the market.
Yeah, I mean, so AbbVie looking for new growth opportunities. To your point, Julie, I did see Bloomberg analysts who know the name well cited as talking about that early data on the Gubra compound suggest it may deliver, they say, results in line with, in fact, a closer to market treatment from a rival Danish biotech. So interesting competitive landscape kind of shaking out there.
Which is maybe why the stock is gone up more than it is, even in a down environment.
Yep. Our next trending ticker, let's check out this one. Sunnova shares of the solar energy company are cratering today. That's after it issued a warning about its ability to keep operating. So cratering is right. This one really took a dive. Company cautioning there's doubt, Julie. It remains in business, doesn't have enough cash coming in to meet its obligations, suspending guidance. Company saying substantial doubt exists regarding our ability to continue as a going concern for a period of at least 1 year.
Yeah, bottom line, they might go out of business. And really, this is just the latest in a trend that we've seen among the rooftop solar companies, plagued in part by high interest rates, which have not been helpful. A lot of these projects, when you put solar on your roof, it's financed. And so there's been less demand because of that. And then add to that the incoming Trump administration, either getting rid of or threatening to get rid of some of the tax credits that had made it more affordable for people to put these things on their roofs. And so Sunrun recently cutting its cash generation guidance for the year. Now you have Sunnova. So this is a sector that really has been battered.
CEO saying the fourth quarter was challenging for the industry, talking about stubbornly high interest rates, along with regulatory and political uncertainties, to your point, Julie, made both consumers and capital providers more cautious.
Yeah.
All right, let's look at our next trending ticker here. That would be Kroger. The supermarket giant is at a crossroads as chairman and CEO Rodney McMullen announcing his resignation. Same-store sales growth lags behind competition, and its proposed merger with Albertsons failed. Joining us now with more is Yahoo Finance's Brooke DePalma, breaking down the latest for us. Brooke.
Good afternoon. As we make way towards the close, shares still under pressure, down about 3%, especially following this announcement that CEO Rodney McMullen is resigning effective immediately. That's following a board investigation of his personal conduct unrelated to the business, but they said the company Kroger said that it was inconsistent with Kroger's policy on business ethics. Now, this did happen quite quickly. Investigation based upon my sources said that it started just on February 21st. Now, interim chairman and CEO Kroger family member and industry veteran Ron Sargent will take the helm until they find a new CEO. But this is causing lots of fear among Wall Street. Many telling me that this was surprising. They said they expected a C-suite shakeup, but not like this, and not certainly happening like this for Rodney McMullen. But this comes as the company has seen lots of shakeup in the C-suite over the past year. There's a new CFO coming in, officially set to begin on April 3rd and joining the company on March 10th after its former CFO left for Costco last year. It also saw a C-suite change up for their chief merchandising officer. That was actually a former leading internal candidate for CEO, but they also stepped down at the end of last year to become the CEO of Circana. In addition to that, Kroger has been lagging against its competition, especially against Walmart and Costco. And when you think about it, what sources are telling me is that this has been quite disappointing. Consumers are pulling back from discretionary purchasing. They should be going to grocery, and Kroger not showing up there. And of course, this comes after that failed $24.6 billion merger with Albertsons that was blocked by the FTC late last year. Lots to go through.
Lots to go through. And the company's set to report earnings this week, right?
This Thursday morning.
Yeah. Do we get any kind of pre-announcement on that front?
Yeah, well, that's actually lifting up some optimism here among investors. Offsetting this CEO resignation is this updated guidance that we heard from the company this morning. So now Kroger expects full year same-store sales to come in at the high end of its guidance range. That guidance range was between 1.2% to 1.5%. They also shared that they now expect adjusted earnings to be slightly above the high end of its guidance range. That high end was $4.45. So sources telling me that that's sort of offsetting this pressure that we're seeing from this fallout of the CEO, and also some optimism here that 2025 will be a stronger year after the company has really been distracted for the past 2 years over this potential merger. In addition to that, we are still expected to see about a low single-digit increase as far as their guidance goes. Of course, not great when you hear other companies also setting cautious tone, but not as cautious as that.
Yeah, all right. With that earnings report. Thank you, Brooke. Appreciate it. Coming up, we are joined by the American Federation of Teachers president, who is leading a charge aimed at Elon Musk and Tesla's share price. More on that when Market Domination returns.
The American Federation of Teachers is urging asset management firms to review Tesla's current valuation on behalf of its union members. The letter citing mounting concerns about Tesla, led by Elon Musk, who also, of course, runs the Department of Government Efficiency, and the potential impact to pension funds. For more, we're bringing in Randy Weingarten, president of the American Federation of Teachers. Randy, really appreciate you joining us. You guys represent 1.8 million members, and you're saying to these asset management giants, the likes of BlackRock and Fidelity, that you're concerned about this. Have you ever written a letter like this about a specific stock before? It seems unusual, and I'm wondering what led to it.
So, if you actually had followed us, and you've had, Yahoo Finance has had me on before when we've written reports. A couple of months ago, we raised concerns about private equity, particularly what happened in terms of the Stewart bankruptcy. We have we're the second largest nurse union. Many years ago, to me it was probably only a couple of years ago, we raised concerns about some folks who were in the hedge fund business, because at the same time as they were trying to get the business of retirement systems, they were also trying to get rid of teacher retirement systems. So we've raised this when there are material issues that we think are going to affect the stock prices or the retirement assets of our members. And right now, so many of our members' retirement funds are basically invested 70-30, 70% in stocks, 30% in bonds. And there's tens of millions of dollars invested in Tesla stocks. And so what we're concerned about is that these asset managers are saying nothing because they're scared to say something about it. And, because they're scared of Elon Musk. So we're just basically saying to them, JP Morgan says, there's a real disconnect between the stock price and the value of the company, even though the stock price has now just gone down 20 some odd percent. Tens of millions of dollars are invested in Tesla by retirement systems. So we basically said, do your job, investment banks. Tell us what you think about these stock prices. Don't get cowed by the fact that Musk has a lot of power in this administration. Do your job, because we're really concerned about teacher retirement benefits and their assets.
Randy, I read your letter to BlackRock, and I just heard your pitch there. I'll be blunt, Randy. I'm still not clear what you're asking these asset managers to do. If you were talking to Larry Fink at BlackRock, and maybe you are talking to Larry, and you say, do your job, what does that mean?
Should we be divesting or not? Should we keep the stock or should we not keep the stock? I'm not an investment manager, and certainly I don't want to deal with this through a political lens. So I'm asking the experts, because frankly, if the stock all of a sudden goes down even more precipitously than it has, and tens of billions of dollars are invested in it, then how do you create the replacement income in terms of these retirement systems?
But Randy, surely you knew. Listen, stocks are investments. They carry higher risk and potentially higher returns than other assets. You could have put your money to work in plain vanilla, right? Savings. I know. Right? You didn't. You chose. And now it seems is the message you're surprised that stocks go up, but they also sometimes go down?
Oh, come on. Give me a break about that. We know that stocks go up and stocks go down. But when retirement proceeds are invested to the tune of 70% in equities, and tens of billions of dollars are invested in Tesla stock, and there's at least one analyst who says, hold on, there's a real disconnect here. I don't want to see a rerun of what happened in 2008 when all of a sudden those banks went under.
Well, Randy,
and that's what we're saying.
To be fair, I don't. Let's cut through it for a minute here, because no, I don't think anybody thinks that Tesla is systemic in the way that the financial crisis that the banks are.
I don't know.
On their,
Randy. There's an FT article today that said that that Rana Fahor wrote that said that my letter was justified. I don't know what the answer is.
It's not that the valuation. I mean, there are lots of companies in the S&P 500 whose valuation is probably over. Randy, this is the only one run by the guy who is cutting stuff at the Department of Education. Let's get to it here. Is that what this is about? Is that this guy has a lot of power? Here's a way to hit him where it hurts because you all believe he's doing damage to the American education system?
No. I mean, frankly, I think it's the opposite is true. I think that these asset managers are not doing their jobs because just like the other tech companies, just like most corporate, most corporations, they're taking a step back. I want them to do their jobs. And so frankly, whether it's, Tesla, whether it's Elon Musk, whether it's another big company, the issue for us is actually the opposite of what you're saying. You can't look at this work through a political lens. You have to look at it financially, and that's what we're doing.
Have you spoken to Larry Fink?
We spoke to people in his orbit.
And what do they have to say?
I haven't spoken to him yet. No, they're taking it. They've said to me they're taking seriously what we wrote. We're asking their opinion. They're the experts.
So, Randy, let me then ask a separate question. You're the experts on education, right, and on teachers and the work they do in this country. So, separately then, what's happening with the Department of Education, the cuts that we are seeing, in particular to the research that the DOE does?
Look, we're just like both of you, just like every school teacher I know, you got to reject the binary. You have to be able to go on both tracks at the same time. And so we have actually sued Elon Musk and Doge because of what they've done in the Department of Education to essentially steal people's privacy and their assets. And we've gotten a temporary restraining order on that. But equally, if not more important, we are really concerned about the cuts to children's education that Donald Trump and others, including Project 2025, want to do. They want to take the basically $100 billion that goes to poor kids and disabled kids, and for career tech ed, and to kids who are trying to go to college for the first time in when maybe the first of their generation to go to college and they don't have the funding to do so. All of those things are basically federal dollars that go directly to kids and to schools. And so tomorrow, there are going to be actions all across America. I'm hearing we have close to 1,800 actions, maybe even more, to basically say, let's protect our kids. And don't take this money that goes to poor kids or disabled kids and use it for tax cuts. Or don't actually block grant it so it can go to vouchers. So we're doing all that at the same time. And we're also saying to Donald Trump and Linda McMahon, I assume she's going to be his ed secretary, don't take a wrecking ball to the education department. Make it more efficient. That's great. I mean, my union never wanted the education department in the first place. We wanted to keep it where it was. But don't take a wrecking ball to children's education.
Randy, thank you so much for your time today. Appreciate it.
Thanks. Thank you.
All right, let's get to our call of the day now. Deutsche Bank upgrading Anheuser-Busch InBev from hold to buy. The note saying, big beer is back. Deutsche Bank raises this rating to a buy. Reported earnings and sales that beat for the quarter, by the way, on February 26th. They say to their clients, we believe ABI is steadily building a track record, they say, of strong delivery despite prior exogenous challenges that should command a higher multiple, Julie.
Yeah, and it talks about 13 consecutive quarters of organic EBITDA growth that is at or above the company's guidance. So basically just saying the fundamentals are improving for this company, and we know it's a down market today, so we're watching for stocks that are not going down.
Yeah, they go on to say ABI offers an attractive combination of EM growth with dominant market share. They talk about digital leadership with beer and improving U.S. and a relative immunity from broader structural challenges within beverages, Julie.
All right, I want to do a check of the markets because the sell-off is accelerating into the close here. Just saw a headline from the White House that President Trump has signed an action to tariff China at 20% here. Remember, he was talking about the 10 and the other 10. That adds up to 20, and so that's the action he signed. He's also indicated that, yes, the tariffs are going into effect on Mexico and China at midnight. On all of this, we see stocks selling off more here at the moment. So definitely seeing a lot of pain, pretty spread across the board here. Energy's doing the worst today. Information technology, consumer discretionary, all of those outpacing the overall declines.
Yep, investors trying to think through what it means for the economy, what it means for earnings growth.
Yeah, more market domination on the other side.
After touching 94,000 over the weekend on President Trump's announcement of a strategic crypto reserve, Bitcoin has fallen back below 86,000 today. Joining us now to discuss the latest developments in crypto, Michael Anderson, co-founder at Framework Ventures. Michael, it is good to see you. So Trump talking again about this idea of a strategic crypto reserve, Michael. This time he also mentioned not just Bitcoin, but also some smaller tokens as well. Did that surprise you, Michael?
Yeah, well, it was really interesting that it came through over a tweet. I think what we can kind of piece together from the tweet is that all the assets listed kind of originated from teams based in the United States. So it does seem that there's a focus on crypto being built in the U.S., but I think what he also said in a follow-up tweet is that the core of the crypto reserve will be based around Bitcoin and Ethereum, the core assets that are the basis of the entire blockchain ecosystem. And I think that this is definitely an interesting move. I think it's a follow-through of the Trump campaign to develop a crypto reserve. But I also think that while this is definitely an interesting follow-through, what the rest of the industry is definitely more interested in is the movement on the bills that are working their way through Congress right now.
But to linger on the reserve for a moment, and to your point, it's not created yet. We don't know if Congress would need to create it. We don't know if these things would actually go into it. But at one point, does it risk looking like a kickback to his donors who were invested in all of these various other cryptocurrencies, in a much more concentrated fashion than Bitcoin, which is larger?
Yeah, well, I don't think that it's necessarily a kickback because many Americans, tens of millions of Americans, own these assets. And all of these assets are the basis, like I mentioned, for the entire crypto ecosystem. And when we look at kind of Bitcoin versus any of the other assets, whether it's Ethereum or any of the other smart contract platforms that are being discussed, those are fundamentally different kind of assets altogether. Bitcoin, maybe you could call it a digital gold, whereas the base layer L1s are smart contract platforms where applications are being built on top of them. And so I think it makes a ton of sense that there's not just one asset that's going to be put in there, but multiple assets. And I wouldn't be surprised if there's others that get included eventually as well.
Michael, after this, big hack of Bybit, would you be concerned about the general security of such a strategic reserve?
Well, I think the details of the hack of Bybit are such that the hackers actually got access in kind of a traditional cybersecurity attack vector in and of itself. It doesn't really have anything to do with the assets. It doesn't have anything to do with kind of the core technology of the blockchains themselves. It's just a classic. They got access to servers that are controlling these assets, and I think that there's a number of service providers that have never had these issues before and were users of those services as well. And I don't have any concerns of those services, having the same attack vector that we saw with Bybit.
What does it tell you that the rally that happened after the president put out that post faded pretty quickly, and we see now Bitcoin and crypto more broadly kind of just acting like sort of risk-tied assets?
Crypto has acted like a risk-tied asset for the last, couple of years, and probably even longer than that. I think, on a day where Nvidia looks like it's down close to 10% today, I'm not surprised to see a crypto sell-off. I don't think that this has anything to do with the tweet or sort of any sort of fading of the expectations of what a crypto reserve could do. I think this is just general market malaise, and as we discussed, or as was discussed previously, the tariffs are coming back, it seems, or getting implemented. And I think that's overriding kind of the general markets right now, not just crypto.
What is your sense, Michael, of what Trump has the legal authority to do here? Because my understanding is he does have the authority. He could tell the government, listen, you're not selling this stash of Bitcoin that we have, but that Congress would actually need to step in for further steps. For example, if the government was going to buy Bitcoin, then Congress has to make a move. But tell me, am I wrong, or are you hearing something different?
It's our expectation too. I mean, look, all of the devil will be in the details in terms of the implementation. The government holds a lot of these assets that either in the Department of Justice or the U.S. Marshals that have been seized over the years. And so one implementation could be holding on to those assets. Another implementation might be something to add to those. But it's totally unclear right now as to what this means. And once again, I think discussing this and thinking about it as sort of the overarching narrative that's going on in the industry right now is missing the forest for the trees, where the stablecoin bill and the market structure bill that are working their way through Congress right now and getting markups and drafting language, those are the things that are going to be the seminal changes that happen this year for the crypto industry.
Michael, thanks so much for joining us today. Appreciate it.
Thanks for having me.
All right, we're wrapping up today's Market Domination. Don't go anywhere. We've got you covered with all the action following the closing bell. Stay tuned for Market Domination Overtime.